Well. We talk about the market making highs or lows for the week on Friday. Well, we got a low in. I don't know if we're going to get back down there during the regular session. PCE at 8:30 will determine that. Nova Nordisk down 20%. Other fat drug stocks rallying. Warren's putting some of that cash to work. Earnings, Nike reversal, FedEx splitting into two companies. That makes it automatically more valuable. Enough. Let's get going. CC Lagator 835. Don't let me forget. It's Friday. It's pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, here we go, folks. March contract, March 25. That's what we're traded down 48.75 handles, 58.85. The buck after a big move earlier in the week, pulling back down 34 cents, 107.81. TLT, man, well, it's green, up 38 cents, 88.19. USO down slightly here, running into problems at 74 bucks. That's down 20 cents, 72.41. GLD trying to put in a double bottom here. That's up 80 cents at 240.40. Silver, that's down. The silver ETF down 0.21 cents, 26.31. And Bitcoin distancing itself from the 100K level. That's down $2,280. Let me stop the screen share here. Let's bring in our cast of characters here. Triple D's coming in. Christian, welcome back. I guess kind of was a day off. Gentlemen, what is going on in the markets?
Somehow this is your fault, Joel. I'm blaming you for
I'm
this.
back. And we tried to rally.
The Joel Elconin rally got faded hard
you know
yesterday.
what? I've decided, this
Faded
price action
hard.
it was not easy. It was not easy yesterday. The rebounds, the rallies, but at the end of the day, Dennis, why don't you talk about the overnight action, what you saw out there? Because I saw your tweet. It almost got me out of bed to lower my offers there. Tell us what you were seeing out there.
Yeah, well, obviously the tape yesterday, and we talked on pre-market prep and said this was a very important day for the markets. What we said was we do not want to see this market give these gains back, because if it gives these gains back, there's probably a lot more pain ahead. It gave it all back and actually closed right almost on the lows. And you never want to see that. Now, we're obviously coming into a key event here, PCE today.
Mm-hmm.
We know the catalyst for the sell-off, obviously the Fed talking about inflation creeping back in. Does the data support that? Does PCE come in light? PCE comes in light, we could get a lot of, today's losses back. PCE comes in line, I don't think we're rallying much. PCE comes in even a tick hot, and we're gonna cascade lower here. So this is a very important number that we're gonna get here coming up, obviously very shortly. But overall, just sentiment has turned sharply very, very quickly. You have the Fed that has caught a lot of people, even myself. I was positioned for, Santa Claus coming to town. We're coming into good seasonal period. A lot of other traders position that way too. But when you get new information coming to this market, and this is what I'm talking about, it's not about technicals, it's about information. I've been trading for 25 years. Technicals will tell you a story, but information is more important. When the Fed came out at 2 o'clock 2 days ago and said that we're looking at possibly only 2 cuts in 2025 and maybe not even 2 cuts, that is new information that has got the market in a tizzy. And we were digesting that information. We're still trying to digest it here. Obviously, we talked about the lie detector yesterday, TLT. When IWM was having that rally, it was up 1%. I'm like, look at the TLT, folks. We're down another buck. IWM is very dependent on rates. And if TLT is going to break down, I don't know if this IWM rally holds. It did not hold. It's breaking down new lows. Tom Lee's 40% rally is going to be put on the shelf here at least for another day. I just think that the bears have grabbed control very quickly here, and it's kind of a perfect storm. You could have almost called the title The Perfect Storm because you had everybody bullish going into this. So boom, Powell pulls the rug out from the bull thesis, and now people are caught. So you're getting the unwinding of people who are caught. How do we know? Retail, stocks going up relentlessly. Even like obviously Tesla has been really running, and we know that's been a little bit overdone here as of late. But so many other retail names, storied stocks with just not a lot of fundamentals behind them, just ripping. To Christian's point, the quantum stocks, just ripping and ripping. Valuation be damned doesn't matter. We're just going up here. QUBT up from $5 to $25 in 3 days. Bang, it's back at 12. You lose half your money. I mean, this is the rug pull, folks. Bitcoin starting to get the rug pull happening here too. Predictable that it would. MSTR is starting to come down as well. Bears have regained control, folks. And if you're not reading the tape and taking in the new information, you should have been selling into that rally yesterday. Long-term account yesterday, I sold out in the morning, right into the rally. Sold out JP Morgan, sold out. What the hell else did I sell? The Roku, which was a swing trade that I bought. I had to get rid of that because obviously that wasn't working out. Sold. I'm just going through. I went through and sold a bunch of stuff. I even sold a piece of my Tesla. That's how
Oh,
nervous I am about the overall market right now.
holy mackerel. Holy mackerel.
But stuff is just overdone, folks. So we want to let Christian talk here too. I've had a 5-minute run-on sentence.
All right. Hi, Christian.
Overdone. So I'm excited for this trading. Back to trading again, not just this relentless uptake.
Yes. Hallelujah. All right. Christian, how you doing?
All right. Well, I love. First of all, I love the energy, and the 5 minutes. Like you could really go on for like 15, 20 minutes if you wanted to, because there's a lot that's gone on, in the course of over this week, and just really over the last month with this rally that we've had. So I will like one of the things I would say too is Joel, like bring up the RSP, but
Okay.
so that was a big realization. We kind of obviously watched this inflation data come out last week. We had the CPI and the PPI both run hot, and it kind of just shows inflation is not going away. So it was the realization, and like Mary Daly had an interview this morning on Bloomberg talking about how, yeah, I mean, they have to change because the data has changed. The data has been hot. So yes, you bring up a good point, Dennis, about the PCE this morning, but you also have a number of other things too. There's a little bit of a wall of worry because whenever they talk about this, they're trying to the budget deal, right? They're trying to get that ironed out. Now, usually, like when this happens, this is always temporary, right? Because they eventually do make a deal, but
Yeah.
the market doesn't like it. And two of the things. So first of all, like this RSP just shows you like what the average stock has been getting killed now for not just this week, right? Because I saw so many negative, so many wrong narratives on social media and so forth. But people are like, oh, well, it's just one day of a sell-off. No, it's not. It's been the average stock in the S&P has been falling for about 2 weeks. So again, there's been when you look at Tesla and when you look at the Magnificent Seven, they have been doing very well in holding up the market, but they're not the overall market. And so you look at the difference between RSP, which is the equally weighted S&P, and the S&P, and there's a lot of damage that has been happening under the hood. You could look at your home builders, ITB. These things have been taken out on a cart. Really, I mean, that's a huge move down. You could look at your material stocks, XLB as in boy, that has been also obliterated. There's a lot of sectors that kind of look like
Holy
that.
mackerel. This could be a record here. How many?
Yeah, so I mean, there's a lot of damage under the hood outside of tech and consumer discretionary. Tesla and Amazon have been holding up consumer discretionary. That's been one of your strongest sectors. And of course, in tech, it's the Magnificent Seven stocks that have been doing pretty well. But like, yeah, AMD is a good example too. That name's on 52-week lows. So I would say a couple of things that I'm watching as well, and I know Dennis mentioned this yesterday too, but you've got it now. It's more of a macro tape. What does that mean? Well, interest rates, and I'm not talking about what the Fed controls, I'm talking about the long end of the curve, because that doesn't the Fed doesn't control long-term interest rates. That's by supply and demand. Rates have been ripping higher. So if you look at TLT, right, that's been a thing that's really kind of caught
That's the
my eye.
tell. The
Yeah, it's the
tell.
tell, and also the dollar. Look at UUP. Not enough people have been talking. People are now starting to talk a little bit about this. But if you zoom out over the last couple of years, we're now just about higher than where we were in 2022. What happened is, what happened in 2022? Well, we had a we had a short-lived bear market, but it was a bear market, and one of the contributing factors was the U.S. dollar. That dollar is now at those same levels. That does not give me a warm and comfy feeling. So,
I
two
mean, the
couple things.
dollar is all about rates. So the dollar is 100%, and I've always believed this, it actually just follows rates. So if you're following the rates, you're going to figure out where the dollar's going. If you look at the TLT and put the UUP inverse with the two of them, it's virtually identical. So chicken or egg, whatever you want to call it. But I mean, these two, if rates are going higher, and we talked about this yesterday when you were away, Christian, I mean, rates are dropping. Canada, they're dropping them 50 basis points a shot because, the Canada economy is falling apart. And U.S. not dropping rates. So you got a carry trade happening here too over to
Right.
the U.S. as well. So, I mean, higher rates, we know money chases higher rates. So the dollar's rally is no secret whatsoever. This is a pure rate play. And the U.S. is the best place to be right now from a rates perspective, really.
So, and then just one last point. So, okay, so I'm talking a lot of negative. The positive here is that we're getting pretty darn oversold in the short term. And I think what I was going to say about the dollar and rates, if they can stabilize, right, and if rates can stop going higher, right, and TLT stop going lower, then we could have a pretty nice bounce. And remember that Santa Claus rally, which everybody seems to anticipate 2 weeks before the actual Santa Claus rally, because that is the last week of the year and the first 2 days of January. That's all
Yeah.
the Santa Claus rally is. It's not a rally before that, but there might be a lot of damage done before then. But I think we're setting up for a pretty nice bounce, provided we get some of those things. Because if you look at things like the McClellan oscillator and the advance versus decline line, like these things are pretty well blown out to the downside. And I think we're oversold at this point, which is a good thing.
It's stock pickers, right, Christian? Because we're massively oversold on some names, massively oversold. We talked about Nucor. I mean, the stock goes down every freaking day. And some of these value names, like at a certain point in time, and I've been saying January 2nd, I'm going to load up my value portfolio here because I think we'll turn. Maybe we turn before that, though. But there's other names, Christian, that we haven't even started selling off on yet. I mean, you look at the Qs, it doesn't look massively
Nothing.
oversold.
Look at
It doesn't even look at, we're back to where we were last week. So, I mean, there's where the pockets of bubbleliciousness was, where those pockets of all the bubbles were. There's nothing oversold there. Is Bitcoin oversold? Hell no. Not even look like it started to get sold yet. So I'm with you, Christian. I think the value names are massively oversold, and maybe we have that bounce in value names. But I think if you're coming in here and saying, and again, I know you're not talking about those names, but Apple, is down $4 from the highs. I mean,
Right.
we're very much, oversold in certain names and very much undersold, I'll use that word, in other names. So is the rotation maybe the trade, Christian, that you're referring to, where maybe the RSP, which has been down 10 days or 11 days in a row, maybe there is a reversal here coming. Maybe there is that potential. Is that what you're looking at?
It could be, and you make a great point about Apple, and I'm also watching Tesla too, because it's usually when like the life cycle of like a market dip or a little correction is that the generals usually get hit last, and Apple and even like I would even put Amazon in that category too. Tesla, these are the strongest names of the market generals, but yes, they usually get hit at the very end, and you could kind of see you finally do have some red candles forming on Amazon, and Tesla's down for the first time in a while, so I would not get really comfy in those names too. I would make sure if you're in those, you've got your levels to trade against, and the whole
there are no levels. There are no levels here, Christian. There are no levels in the S&P. I mean, until first of all, we got to stop going down. Okay.
Right. Yeah.
And right here, this is really, and I've been thinking about this a lot. Okay, right here was the trepidation over the election, right? And this is the election day low right here, right? And everything's going to be great. Everything's going to be fantastic. And now reality is setting in. Things aren't fantastic. We haven't even talked about the government shutdown. That's going to be the thing. Be careful if you're just shorting like indiscriminately today, because they're probably going to pass the budget at some time, and then you're going to have some
Oh yeah,
ridiculous 40-point
bounces.
rally, and you're going to get mowed over, and you'll be like a shorten it in a hole. But I mean, I would be I would be comfortable reloading looking at longs at 5,800. The question is, are bulls going to step up between the quad lows right there at 5,800? That's still 80 handles down. The question is can we at least stop going down and consolidate? And right now, it's not showing any signs of that.
I think Christian's making a great point, and it's all fun to get bearish and and look, but there's a lot of stocks that are definitely oversold. Pockets of where the bubblish isn't. It's the opposite. Pockets of despair. Where certain value names, and we're getting PCE data here in 14
Yep.
minutes. So I mean that could change everything. So right now we move to the information market, where we get new information, we make new trades off that information. In 14 minutes, we're going to have a whole pile of new information. If the number's light, then there's holes in the Fed thesis, and maybe people start thinking, well, maybe we will get more, and maybe we do rally. So I mean, what I've done is I was short coming into today. I'm covered and I'm like hedged right now. I'm hedged right now. I'm hedged right now going to PC, because if it comes in light, it's going to rip on me. So I've got to, be prepared for that. But what I do think you've done is now create nervousness in this market and some fear. So I think rallies are to be sold now, just like Nike, which we can go to an earnings report from last night. And I was tweeting about it last night. This was an absolutely stupid rally. Dumb money buying Nike. Algos ripping it higher. One, Nike is the dog of all dogs. Rips usually get sold. Two, the earnings report wasn't even that great. It just wasn't that bad. So, and the guidance hadn't even come out yet. So they ripped this thing to $86 last night. And I'm like jaw dropping. This is the stupidest thing I've ever seen. I did short some stock up there. Wish I would have shorted more. You never short enough, but it's always scary to short the rocket ships. So I did get some shorts off. And I did cover it. So I made 7 or 8 points off of it, which was really nice. Again, light size. I should have really loaded up, but it's hard, when stocks are ripping 82, 84, 86, it's hard to put on big size. But I was pretty convicted that this probably was going to come back in. I didn't think it all go back and then go down $5 too. But I thought, it could give the gain back, and it absolutely did. So one, rips are being sold, folks. This is the market that we're in. That's the tail of the tape here. It wasn't like that 2 days ago. It is right now. So you've got to take the new information where if you do even get a ripper, let's just say it comes in line. Scenario analysis, PCE. Christian will chime in here too. Scenario analysis. We're light. We probably rip. Do we hold? It depends how light. If we're in line, we might rip. I would sell an inline rip rally. If we're hot, we're going to sell off. And then the question is how, hot is it? Is it a tick hot? Is it not a tick hot? But I mean, that's your scenario really going into PC here in 11 minutes. Christian, what are your thoughts?
I mean, I think that I think that the response on the upside might be, just as you said, short-lived, because we don't, that's not the only thing that's going on right now. You also have the government shutdown, and we don't know if that's going to get resolved today or if it's going to go over the weekend and then get resolved. So I think you've got to have more than like a couple hour viewpoint right now. But overall, like, I think come this weekend and so forth, you want to have some names that you might want to start having on your buy list. But I don't.
What are those names? Give us the names that you're talking about, Christian, because I don't think you're talking the quantum stocks here anymore, or maybe you are.
No,
because that obviously bubble burst. But I mean, where are you looking right now?
Well, and the quantum names too, as we were talking about as this was going on, I was like, I think that these are more like day trade opportunities, because these things, most of them don't make any money. It's just a theme and a story that's being played out right now. In terms of names, I would be watching some, a couple software has been strong. I would be watching some of the strong software names, but I always go to quality. I do have, in a strong earnings list. Names that had really good earnings, and that's names that I'll tend to stay with. Things that I think are going to be strong for a while. I would be looking at. I like some of the private equity names, like I like your KKR. Now I did take off that position. I had that position on because just everything was breaking down. But I
Yeah.
would be looking at some of your, a couple stronger financials like this. And a couple, I'm looking at Google too. I did I'm starting to kind of add a little bit to Google because I do think that they've got a new theme, that to watch. Broadcom, I think, has the ability now to possibly be the new semi name rather than Nvidia. So I'm watching that one as it kind of comes back in, and maybe it comes back to that earnings gap, and that's where I would look for the price to be defended. So just a couple names, but I'll be doing that more this weekend. Again, I think we're still kind of in the early stages of that. Even
Yeah.
if this PC number comes in okay, you got to get through quadruple witching, which again is going to be a huge volume day. So I don't really like sticking my neck out on quadruple witching days. Joel could probably talk to that a little bit too.
Oh, it's going to be, it'll be interesting. Yeah. You do have the quad witch. We talk about the extra volatility that comes in with that. Turning points in the market. Obviously, we've had the quad witch, strong closes, rep. I just like to see as I mean, I just am not seeing any great support, and I'm just going to reiterate that. Just going back to those November lows, but it, like to see us make 2, 3 lows in the same area. Find a support, then move away from it. We got a nice move today off the 58.66. Just don't like to see pockets, in the market like this where there's just nothing in there to support it.
There's so many bubbles here left, though, too. Look at Reddit. We got Guggenheim starting it at buy today. As much as Mizuho, was it Mizuho that top ticked Tesla? I said it that day. I said I think they might have top ticked it.
Yeah.
You got Guggenheim maybe top ticking Reddit here. I mean, starting at a buy now. The stock's from $60 to $160, trading at ridiculous valuations. Hasn't even started selling off here yet. Hasn't even had, a sniff. That's one. Kick them when they're down. I mean, you lose 4 points, get a little bounce here today on that. I'd be dumping that Reddit because I think that bubbleiciousness is coming out of the market here right now. And that stock hasn't even started selling off yet. Palantir hasn't even had a sniff of a sell-off here yet. But if it breaks down through 70 and starts going down, there could be a short opportunity here on Palantir too. Again, everything changes in 7 minutes. I'm not initiating nothing right now. Nothing. Because you know what? Somebody's going to take this clip at 8:23 and say Dennis was bearish, and PCE comes out light, and they all rip higher and say, look how much of an idiot Dennis is. And you know what? If it goes down, then nobody will talk about it. So because that's just what they like to do, because 10% of people absolutely hate my guts out there. But what I'm saying is there is pockets of bubbleiciousness everywhere. So, yes, there is pockets of despair in those value names. And I think there's going to be a trade in the value names here eventually. But to come in here, I don't know if the Palantir, yes, the story is still intact. Story is still cool. Yes, maybe Santa Claus is coming to town. But we're up from $30 to $74 in 3 months. I mean, these are big moves. It was $7 at the beginning of the year when I was talking about it and screwed the trade up. It's up 1,000% this year. Did it go up 1,000% next year and 1,000% the next year? Trading, at 150 times, whatever the hell it is trading. I mean, this is just getting to a point of there's so much ridiculousness out of here. And some of this needs to come out of the market. And that's why when I look at the S&Ps, I don't even see a sell-off yet. You look at the long-term chart on the SPY. Bring up the monthly. I can't even see the sell-off, Joel. I can't even see it. From 2020, from 250 to 586, it doesn't even look like anything. Where is that? Blow that chart right up. Where is the sell-off? Where's the weakness? Where is, this, we're again, now different story in certain names, but there's so many names that are just, people are just like, yeah, we're just going higher forever. And that's it. 22 times earnings. Who gives a shit? We're just going higher. I mean, this is, the mentality that was out there 2 days ago. Now people are thinking about it a bit, but they're still not thinking about it because they come in and buy the dip yesterday. They'll probably come in if PC is a little bit light and buy the dip here today. But just be cautious here. This is not what I said a week ago, and you were Christian too, was right as well. I said the easy money has been made on the bull side, and Christian was giving you a lot of data from last week too, saying, look, there's signals here that we've got some pockets of weakness here, in the technicals and looking at, his different indicators that we're showing that a possible sell-off could be coming. So, I mean, am I selling everything out of the long-term portfolio? Hell no. You're long-term, you're long-term. But do I have long-term swing trades on right now? Hell no.
You know what we gotta do? We gotta get Christian bearish. We gotta get him all out, just all out, flat out bearish.
All right, I'm gonna bring us back on track.
Christian is the bull, like Christian. And you know what? Even in bear markets, this guy, Christian. This is why I love this guy. One ran on Christian. 2021, the biggest bear market, and Christian's still green for the year. Like he's still holding up with bull strategies here. He finds the bullishness and the bearishness. He finds those pockets. This guy is the best bull trader ever, man.
You gotta learn. We gotta teach this guy.
He is. He's the best, man. Just finding like the strength. I love Christian Fromhertz.
Thanks, guys. Listen, but I think what we're getting at is that patience is key here. There's no reason to catch falling knives. I like what Joel said, that he doesn't see support around. And I like what Dennis said, that there's still a lot of froth in this market. So patience is key. I'm going to bring us back on, since we got a couple more minutes before PCE. You know who was buying the dip though yesterday? There was a guy.
Warren. He's taking a page out of Kathy's book, and Joel's saying, never frown average down. I'm in that Oxy at 62. Better lower that cost base there. He buys a little Oxy. He buys a little Siri, which has been an absolute disaster for him. And he buys a little VeriSign, which, that one hasn't been as bad. But, man, Warren has been ice cold with his picks here as of late. And Berkshire Hathaway still holding up pretty well too, considering that, that he's kind of been ice cold these picks. It's held up pretty well. I mean, it's down 40 bucks.
His buys are kind of like they're nibbles, right? He's nibbling back into the market, right? He's not going all in, He's got a lot of cash. He's got tons of cash.
He does. And that's the other thing, is he's been bearish for a while. So that is correct. He's been sitting on a pile of cash, but he's picking on the same names. Oxy. I don't know why he loves Oxy so much. I mean, it seems to be the dog of the group. Like even, ExxonMobil and Chevron went up there in October, made new highs. Oxy couldn't even really get a sniff. He's kind of picked on the worst of breed here. So it's kind of interesting here, even from a valuation perspective. Oxy, let's just go to her trusty here. We'll just go in here and look at our trusty fundamentals. Oxy, PE 13 forward, XOM PE 11 forward. I guess they're all kind of in there. And Chevron PE is 11. So Oxy a little bit more money. But I mean, I guess he just likes my stocks to make money. He's always been about that. He
has a vision that Oxy is worth like X. And I'm not sure what, that X is 60 or.
The only way it's going there is if he takes it over, and he said he wasn't going to do that.
That's what he's like. That's a strong. I mean, he just has, sees something in that. But we got to shift gears. We got to get.
I'm going wide. Wide.
Okay, so let's just set this up where we are nearly 20 handles off the pre-market low of 58.66. So I will call that support. When you drop like we did overnight, 65.5 handles on the upside here, I will just give you. I'll make it simple. The bottom of yesterday's range is not up. Oh, man. It is the bottom of yesterday's range is 59.31 and a quarter. How many people would like to see the bottom of yesterday's range? That would be a day gap fill. So anywhere in between, we'll see what happens. If we take out this, if it's super hot and we take out this 58.66, try not to be a superhero, because as I show you on the dailies, I mean, this quad bottom here, we'll see. We may never get to 5,800, but that's where the support comes in. Triple D is going wide.
I'm going to background for a minute here.
Yeah, go. Christian can help me through this. Christian, expectations.
Yeah, so what they are expecting for PCE price is 0.2%. The year-over-year number is 2.5, and then we also have the personal income and personal spending. But 0.2 is the number that I'm watching for month over month.
Okay, here we go. The people with the super fast algorithms are getting the number as we speak. We're popping. We are popping. We climbed into the 58.90 handle, 91 bid, 92 bid, 93 bid, 94 bid. Let's see what
Whoa,
happens.
point one,
Sure.
point one, point one.
It's like the Fed's reversing. We're lowering rates. Powell's coming on right now. There we go. 98 bid. We're trying to get into the 5,900 handle. We've done that. We've taken back over half of the range. The battle of 5,900 here. Algos are saying buy, sell, buy, sell, buy, sell. Little pause here. 40 handles off the low. Short-term traders, they're bailing here at 5,900. Let's see what the high 59.0175. Peeling back here a little bit. What? Give us the rest of those numbers.
All right, so that's the headline number. Sorry, I got to see what's going on here too.
Okay.
So that so the PCE price index month over month 0.1, so that's lighter than expected of 0.2. That's really good to see. You also had personal income, and by the way, the sticking with the PCE, sorry, the year over year is 2.4 versus 2.5. The personal income came in 0.3 versus 0.4, and personal spending came in 0.4 versus 0.5. So all numbers that are a little bit lighter than expected, and hence let's take a look at trustee bonds, what they're doing. They are rallying. TLT or 30-year
I
bond
have it up.
futures. Oh, you
Yep.
good? Okay, go for it.
Yep. No, we just we were rallying into it, but sometimes the old flight to safety, right? Flight to quality when the market's tanking. So here we are, battle of 5,900. Let's see what's going. I mean, what's yesterday's high? Yesterday's high, ooh, right here, right now, in the TLT, 88.39. Yesterday's high. What the bulls are right there, 88.40. Will it be a double top? Not much after that. Your next daily high comes in at 90.37. There you go. Trying to get an 88.40 bid. S&Ps, we are now almost 40 handles off the low. So
Yeah, look at
stability
TLT go.
comes in here.
Woo. I just bought everything 2 minutes ago. I'm just kidding. Sorry.
Yeah. Yeah, when we tried to convince you to go bearish, but what about stocks? What about stocks? What do we got moving here? We have Apple. I mean, we still have stocks substantially in the red here. I think what you need to do is you need to look at the bottom of the previous stage range on this stuff. And look at that. Apple has already filled the gap, showing relative strength, 247.09. Barely took that out in the pre-market trading. How about Nvidia? Nvidia got the love the other day, and 129.55 right there, trying to get into yesterday's range. S&P still ripping here. No offers in sight. I know Triple D is probably trading his what off, but 59.10, 59.12, high of the day 59.45. If you're looking for a gap fill, 59.31. But what I'm gonna do here, we're gonna take a break, or not really a break, but we got Quad Witch, right? And on Quad Witch, what do? We talked to C Lagator. So let's bring him on right now. All right, coming to the stage, CC Lagator, founder, creator of Options AI. CC, man, how about this market?
How's it going? Great to see you, Christian.
Likewise, great to have you
Yeah.
on, especially on quadruple witching.
I know. Great show so far, by the way, and it was like a perfect setup to sort of talking about it from an options perspective. So today is obviously a massive expiration. It's the biggest ever, by notional value and
Really?
things like that.
Yep.
Yeah, and that, obviously the options market continues to grow, right? So the trend is to have the biggest ever. But this one is pretty exceptional because if you think about it, it was an election year. There were a lot of people looking out to the end of the year to position in options. We got up near a big round number of 6,000 in the SPX. There was a lot coming into this expiration that had sort of the options complex set up as one of, as the biggest ever. So it's interesting to think about, your conversations earlier, and Christian got into it early in the show about were there signs of like what we just saw the last couple of days leading up to it? And I wanted to touch on a couple of points because options played like a pretty crucial role in hiding what was going on behind the scenes. And so if you look back 2 weeks, the VIX was like 13, right? We had this massive rally coming out of the election. We got up into that 6,000 area in SPX. We got a little bit higher than that and everything. Basically, the market ran into a massive wall of calls that had been sold towards year end, right? By a lot of people that were positioning, they were buying equities into the election, out of the election. They were selling upside calls, a bunch of institutional sales of those calls and everything, right? So the market, the market gets up to that spot and it kind of pins like in the mud for a couple of weeks, right? And realized vol of the market was like at a historical low. The SPX was barely moving day to day, right? Then, as Christian was pointing out earlier, and then you guys were sort of filling in about like the different sectors and things, it didn't seem like the market was going sideways, right? So you had all of this crazy divergence in the market where people are buying MSTR up like crazy, right? And then people are selling off, and then like literally people are losing their life savings in the Hakatua Girls meme coin or whatever, right? So things seemed crazy, and yet the market was kind of going sideways and hiding it all, right? And that was a result of a lot of that had to do with the divergence happening and the SPX basically not signaling the divergence. And at the same time, the VIX was hiding the divergence as well. Now, there was a couple of, from the options perspective, a little, in hindsight, there were some warning signs there. And one of them was the skew reading. And I think you all, you might have asked me about it last time, Joel, actually. And the skew reading is interesting. There's a couple of different measures. The most famous one is like the SIBO skew, right? Literally SKEW. So the skew index was at like a all-time high, right? It still is close to an all-time high, actually. And normally I wouldn't put a ton of, is this a big signal? Is this a bearish signal or everything? Because anytime the VIX is low, that skew reading goes high, right? Because it's just basic math. Like at the lower the options prices get, if you have, 13 at the money vol in SPX in the options right there, and the downside puts are 16, it's just because they're dollar cheap or anything like that. But in this case, something wild was going on, I think, in hindsight especially. It was the skew readings do measure out of the money in both directions. So they overweight downside puts in the index, I believe, and then they underweight upside calls, but they still factor in upside calls into those readings. And I'll translate this all into like a little bit more plain English afterwards. But basically what was going on is you were getting crazy upside call buying in certain areas of the market. And it was, obviously the MSTRs before it reversed it, but it was even like the Mag 7 stocks like Tesla and all of those stocks were seeing crazy upside call buying. And then you just had a natural skew to the downside in the puts because the VIX was low and vol was low, right? And so what happened was all of that was kind of hiding a little bit of chaos behind the scenes. And for it to like kind of all come together and sort of, kind of get out of the craziness is things had to correlate all at once, right? And we finally got that the other day where everything kind of came together and everybody was like, the whole market's kind of overvalued, right? And there's some risk into, the Fed's decisions and things like that. And it kind of all correlated, and that's what we saw yesterday. But there were signs for a couple of weeks, and it was really kind of interesting, especially when you look back. Capitulations on the downside are, I find, quite easy to time, right? It is, CNBC does their markets in turmoil segment. The VIX is at 50. everybody, like your Twitter feed is like, people are like stocks are never going to go up again. And you kind of feel it like that morning. It usually comes pre-open, there's a puke in the futures and things like that. Tops are a little harder, right? Because the VIX,
they lull you to sleep. They lull you into complacency.
The VIX can stay at 13 for months, right? And it's really hard to and so you kind of have to look for, is there anything weird about what's going on? And we've talked about it in the past, like, the obvious ones are when you get like sort of meme stock crazes and you're like, people have lost their mind. We sort of saw that like the last month with, especially in like the crypto space and things like that. But like when it all kind of comes together, then you start looking at some of this data, and Christian was bringing it up earlier, like some of those indexes where you're like, is the market hiding something? Is it hiding some fear? Is it hiding some chaos? And it exactly was, and options actually had a lot to do with it.
Well, this is a great point, and I'm so glad that you brought up skew, because it hasn't really been talked about as much, like, in mainstream about, the VIX really wasn't hiding, and they're different measures, and CC's bringing up a great, like, describing what it is, and the VIX measures 30-day at the money S&P options, where skew measures also S&P, but it's the tail risk, it's the out of the money options, and something was going on there. Sometimes you don't even necessarily need to know like the mechanics of like what could be happening there, which, and CC describes it perfectly in terms of what was unfolding. I mean, you had, and this was what made the market really difficult, was that you had things like Tesla and the calls, just so many calls that were going up in Tesla every day, and the MSTR. So there was this major momentum in these few stocks that was masking things. So that's what the skew looks like. I just wanted to bring that up so that you could see that's the all-time chart of skew. And this was flying, telling you that out of the money options were getting very, very expensive, very different than what the VIX was telling us. Thank you, CC. I just wanted to interrupt there.
Let's leave this chart up for a second, Christian, because I was looking at this, like a week and a half ago, 2 weeks, because it started getting headlines and people are like, skew's not only high, it's like insane, like at an all-time level. And a lot of times if you look, if you just go back on that chart, anytime that skew's like, 150 or whatever, I'm like, and it's probably just because the VIX is 14, right? And the VIX is low, skew's going to be high. I wouldn't read too much into it. When it started going like crazy, like that up and to the right towards the end, and it's kind of been like, creeping up the whole year, except for like these massive moves down, which, if this market followed through and we saw if this turned into a 7, 8, 9% correction, or even 10%, you would see that come down, that chart, right? And the reason for that would be the VIX would be 30 and the skew would be down, right? But in this case, it's sort of mysterious. And it took me a while of like staring at it and trying to think about like what was going on. And then I started looking into those, what Christian was just saying about the Teslas and the, we've seen NVIDIA almost all year. We've seen like lately the MSTRs of the world. And I literally had to, I asked ChatGPT because I wasn't exactly sure what the components of the skew were. I was like, is it just puts? Is it in both directions equal? And it's both directions. And so I think the reason it is at all-time highs is because you had the normal put skew, or kind of high put skew because vol was low, but you also had this crazy upside call buying. And that is what that is showing, is it's showing that the market and traders within the market are completely, they're kind of confused, isn't the right word, but they're like, we are either going to have a face ripping like melt up right into, let's say, inauguration day or whenever, or even after it and into year end, or this is all going to come crashing down in like 1 second. And they were kind of positioning in both directions, if that makes sense.
And this also, like, so first of all, like, I'm absolutely loving what you're saying. When you see something like this that's out of line, right, that is giving you readings like this, do yourself a favor as a trader, as an investor, and this is really what I love about the market too. Do yourself a favor and try to learn a little bit about it. and not just like discount it and say, hey, what is this telling us? And that to me is what I really have always loved about the market, is like, even if you're not an expert on some of these things, go and learn a little bit about it, because you can use the AI, and also you could just Google these things too, and you could get an understanding of like what these things are telling you and how to read them. Because even though CC's an expert on this stuff, sometimes you have to refresh yourself. You have to refresh, like, and think of, and go in and start looking at overall the market and saying, does this make sense in terms of the context of what we're seeing right now with all the Tesla options and so on and so forth. So I love what you're saying, and so now that we have this go on, and we've got all this volume that's going to take place for today, what are you thinking for today? Like, how is this? How is Friday gonna work?
What are futures doing right now, Joel? Like, are they still?
We're exactly like halfway back on the session,
Okay.
and that's like sometimes like when you don't have numbers, what I like to look at is mid range on the session, and that comes in at 59.05. So right now we've got half of the losses back.
Yeah.
We're 13 handles off that high. Just real quick, Emily Weiser, she just wanted some clarification. Are you saying the skew is inversely related to the VIX?
I did see that question. It's a really good question. So
Okay, please address.
it is kind of, right? I guess, to answer that question, in that if you see the VIX at 30, you're going to tend to see very lower skew. And if you see the VIX 13, you're going to see higher skew readings. And that's just kind of like one of those, percentage versus. So let me explain it this way, because I was a market maker. And you're going to see high skew like into expiration this afternoon on options expiring today. And the reason for that is a market maker doesn't want to sell you a 5-cent out of the money put or call with an hour and a half left in the day. It doesn't matter if the reading on that is 300 vol. They don't want to sell it to you. Right? So they're going to keep raising that, right? And so that's essentially what happens to skew when the VIX is like 13. So 13 is mostly the at the money options, and like right around there. If you're going to buy a put from me, I'm not going to sell it to you at 13 vol, like a put that's, 250 points away in the SPX, because I don't want to sell you a put that's dollar cheap that I can't really make any money on. Right? I don't care what the vol is, right? And so that's where you get that inverse relationship. Now, of course, when the VIX goes to 40, I'm selling meaty puts to you because I'm most likely going to make money. And so I don't need to keep raising the IB on those puts. So that's like sort of like a behind the scenes inside baseball version of it. And then, so back real quick to Christian's question about expiration. It's a tough one. So I can tell you what the setup was, which was actually kind of surprising to me. The options market was pricing in almost a 1% move for today, right? And that was the PCE, that was the vol that we saw. It's also indicating that the market is kind of in a no man's land right here, right? So a lot of times when I come on and we're doing expiration day, if the market is like really kind of loaded with a lot of options right around that area, I can almost tell you guys like, oh, the market's going to pin exactly or close to this number, right?
Done that, yep.
But today is we're kind of in free fall land because we're down towards where people were buying puts more so than where people were selling calls. And so I think the open is going to be kind of wild, right? I think it's going to be really wild.
Definitely.
There's a lot of moving parts.
Do you look at the put call ratio?
Yeah, well, so put call ratio is interesting because it's sort of what I was talking about, like one of those signals to time, bottoms in the market in particular. So it's mostly a contrarian extreme indicator to me. Normal day to day, the put call ratio is probably, although I would say, Joel, like the way you trade, it might be, like when you all talk about like the buy imbalances and stuff into the end of the day and things like that. In that case, like a short-term version of the put call ratio is kind of important.
Okay.
But the overall trends, I would say it's an extreme contrarian measure. When you see that ratio, like you've just sold off 6% in the market and the put call ratio is spiking to the put side, obviously, it's a great contrarian indicator. You're like, I think we should buy this morning. You know what I mean?
Yeah,
And
I wanna expand on that, CC,
yeah,
because we've had you on, and we're gonna have you on every expiration here until eternity or I retire. And there's been some times where you've come on and you're like, if you're looking at calls right now, they're cheap. Like if
yeah.
you think that the situation is it's an overdone sell off forever, you've come in and you've said, are we at that point? Are we getting near that point, or we just got to let the dust settle after this quad witch expiration?
So no, what's interesting is like if we had done this a week ago, I would have been like, buy a call or a put, whatever your bias is, out into like February, right? And the reason was that VIX, like the same thing that we were talking about, that
Yep.
was kind of hiding the turmoil, and you could sense the turmoil. And it was like one of those few times where kind of like consensus, like FinTwit consensus, was kind of right. Like people were starting to be like, this isn't right. This doesn't feel right. And then, like the Dow was down however many straight days, right? Like who looks at the Dow normally, but like it was kind of showing something, right? And so that kind of setup, like a week ago, I would have been like, go out to February or even March. In fact, I tweeted like earlier this week, I was like, man, if you were ever looking for a hedge, go out to March expiration. And I did a Q put spread. And I was like, the break even on this put spread, and this put spread will protect you against like a 6-7% move lower in the Qs or whatever. Its break even is where the Qs were trading last week. You know what I mean? And it literally hit it like a day later. It hit the break even. Like that's how cheap stuff was like a week ago. So now is kind of interesting because we are also going into the holiday, right? We're going into the really weird setup in the market in that we've had this bout of volatility the last couple of days. It could resolve itself today. We'll see. Then we've seen this spike in the VIX up to 26 or whatever. Then we go into like a really low volume week next week, right? I think Tuesday a half day, Wednesday's off.
That is correct.
So,
Yep.
So you might get this really weird, like if we resolve ourselves today and everybody's like, okay, the PC, let's stop panicking, everything like that, and we get a little bit of a bounce, we could see that like kind of boring, slow creep higher like next week and into year end and all. What I will say is that the risk reward to the upside and downside is still a little bit off, right? Because I don't see the market getting past that 6,000 and change level in the SPX anytime soon. And we might start off January super volatile, like after we've gotten through these holidays. So I'd be very careful on that. And so now I remember what your question was, Joel. Basically wait until, so like if we see that really low vol, slow creep thing, like next Thursday or Friday, when like when on TV they've got their kids down on the New York Stock Exchange, that day, look to like go buy those options and stuff like that, because nobody's watching, vol's getting lower. Like as a former market maker, you're already like on your way out the door. So look for those opportunities and then get back into, if you needed a hedge and you've missed your chance, look on those days. Or if you want more upside in one of these oversold stocks, look on those days.
All right.
I love this. I love the kids on the floor of the New York Stock Exchange indicator. Beautiful. Love it.
I don't think the market's ever been down that day, right? Right? Like somebody's got to look it up.
All right. You guys know him. He's CC Lagator. He's the founder of Options AI, breaking down this market. I will have to get out my textbook here on some of the terms you use, but always a great education. You got your invite for that January expiration. I'll send that out to you today. Thanks, CC. We'll be talking
See you
to
guys
next
Great
month.
Stuff.
Okay. All right. Where in the world is Triple D?
Hiding in the background here. It is choppy. So one, the initial reaction is not good here, but with that being said, it's options expiration. It's still early. Maybe money managers come to their desks and, in the next half an hour and say, hey, PC is light. I'm going to buy here. So far, not so good here, though, because a light number, you would expect it to rip, roar, and rally. And we're kind of fizzling here a little bit, Joel. We kind of bounced a bit. We are up. We have bounced slightly here, but it's kind of disappointing. The TLT has had a nice little rally here this morning. We're up about 50 cents on this lighter number. Again, this isn't CPI, it is PCE, but it is something the Fed looks at and obviously makes decisions off of. And we just got the information where they're saying inflation's creeping back in, so we're going to be, take our foot off the gas pedal on lowering rates here. Well, today's data says, well, maybe it's not creeping back in. So you would think the market would say, hey, we're buying stocks here because the Fed's wrong. That's not really happening here. Well, not happening yet.
It's like we said too. I mean, this government shutdown is still weighing on the market, and I think that, and I really like what CC had to say, and what you guys are saying too. You got to be a little bit patient. I haven't bought anything here, but I might put something on as we get closer to the end of the day, because ultimately, I think there's a good chance that they resolve this debt situation over the week, if not today, over the weekend.
Yeah, it's a good call. The weekend debt trade, they resolve it.
And if that happens, there might be a gap on Monday. So
yeah,
I think you want to have, now again, it's an uncertainty. So that's why you could take a shot at it with an option or maybe a call spread or something like that. But you're dealing with some uncertain events, and you don't know how that this is going to resolve itself. Do I think it gets resolved? Yes, but it doesn't. But the timing is going to be somewhat crucial to this, and but that's why I think too. Just as we said prior to this, is you hit the nail on the head, Dennis. You're like, I don't think there's going to be this huge bounce, but and it may get faded to somewhat because we've got all these market mechanics that are happening today, which is the quadruple witching. There, by the way, there will be a ton of volume on the open because
oh my gosh, it's gonna be huge.
Because of the futures are going to officially expire for December, and there are market makers at institutional trading desks. This is something that I used to do back in my trading days on a Delta One trading desk. There are these guys who will have baskets of stocks that are going to be offsetting the futures expiration, which officially goes out instead of on the close, it happens on the open. So you'll see this massive volume happen for about 2 or 3 minutes, and then it will diminish and kind of go away. But watch those herky jerky moves right in the first couple minutes of the day.
Okay, so strategy session off of this. Options expirations are typically my best days of the year. Obviously, you get 12 of them, but why? Because what Christian's talking about. You have fundamental institutional traders that are pushing in big volume. What that does is it pushes stocks away from where they're currently trading and pushes stocks away from their fair value. So there's opportunities to basically, what I do is stocks fair value here. I put short orders up here. I put buy orders down here. Stock opens too low, I'm long. Stock opens too high, I'm short. I try to pull out news stocks because it's unpredictable to say where Lilly's going to be here today, or NVO, which we can get to that news here in a second, because they're big movers. But just to give you a feel for this volume that's coming in, the opening imbalances are absolutely enormous. I got 1.5 million to sell in BAC. It's as big as you'll ever see. JP Morgan, 600,000 to sell. Wells Fargo, 600,000 to sell. Coke, 1.3 million to sell. Walmart, 1.6 million to sell. Pfizer, 1.2 million to sell. Merck, 500,000 to sell. Going the other way, NEE, 680,000 to buy. Duke Energy, 257,000 to buy. SO, 368,000 to buy. So somebody's interested in buying utilities here this morning. Again, these can change. It might be one institution that says, I got 500,000 to buy, and they put that order in at the last second, and the stock opens higher. So these can flip and do funny things. But if we were to open right now, just to finish my point, if we were to open right now, the stocks would open significantly lower than where they currently are. Again, new information happening here. Orders may come in and offset, but there is huge sell imbalances here today.
Ricky Bobby, Dennis, real quick. I know we've done this a lot. What are opening imbalances? Just could you give a real quick
yeah, so something that I've traded my entire 25-year career. It's something that people don't use. Obviously, you can get this information if you're with IB. If you're with Robinhood, you're not going to get this information. You get what you pay for. Maybe they're going to get that information eventually because Robinhood's doing everything right. So basically, you have orders that are geared, opening only orders geared to buy on the open or sell on the open. What the opening imbalance does is it nets them out. It comes in and says, okay, Walmart, We have 1.6 million to sell. What does that mean? Relative to the close, there's 1.6 million shares more to sell than there is to buy. So which would be logic? You know, you're going to see more selling imbalances because we're down here. So we're probably not going to open up on Walmart 93.40. So a sell imbalance is logical. A 1.6 million sell imbalance is huge, though. So that takes another 1.6 million people to buy, obviously, or the stock could open significantly lower. So what it does is it tells you basically, you know, and it's a moving target. These numbers are changing continuously. If I put an order to buy 1,000 shares of Walmart right now, that'll drop a little bit because, you know, it's all as orders are coming in. Remember, institutions are just getting to their desks. There's going to be more orders coming in. 9:30, it's a moving target. So NYSE starts publishing these at 8 a.m. NASDAQ doesn't publish their opening imbalances till 9:25. That's why, and then at 9:28, they lock it in. So that's why you see these violent moves at 9:25 and 9:28, because all of a sudden we have new information coming into the market. This is why I've said for so long, you have certain traders that just use charts. That's all I use. If you're a long-term trader, if you're a swing trader, that might work for you. If you're a day trader, it doesn't just work. You have to have other information. You need all the information. You know, I spend thousands of dollars a month on information. Christian does as well. If you're sitting here and trying to be a professional trader and spend nothing and think you're going to make money, think again. It's a business. Trading is a business. You have to spend money to make money. What do you want to say, Christian?
I have two questions for you. Number one, so as you mentioned, like these orders can be offset, and I think it's 9:28 where you could place a market on open order to offset.
Yes, on NASDAQ. So on NASDAQ, you can keep going until 9:28, and then they lock it out. Floor brokers can still get the orders in there, though, so they can still go in afterwards. But, you know, everybody else in the whole world is locked out. NYSE does not lock it out. They let you keep going. So you can keep offsetting even after the open. Sometimes stocks, the DMM's got a lot of stuff. Stocks on New York Stock Exchange don't all open at 9:30. It's not automated. DMM's sitting here and he's trying to work some. Sometimes it's 3-4 minutes later. You can still be placing orders. So NYSE does not lock it out. But NASDAQ does. And that's why the violent moves at 9:25, you often see violent moves in the NASDAQ. And violent, I mean like stock sells off 25, 30 cents. Stock sells off 50 cents. You know, I'm not talking stock sell off 5, 10%. Stocks sell off, 0.5% or a move, because new information is coming to that market. Kind of, we got a feel for the NYSE. We have no clue what's happening on the NASDAQ right now. We can assume if there's a lot of sellers on the NYSE, there's probably a lot of sellers on the NASDAQ as well. But this market, if these sell imbalances hold, is going to have a hard time rallying here at the open.
Okay, so second question, your strategy, which is going to be like after the close, right? You're
No, on the open.
Oh, okay. On the open, where it's basically reversion to the mean. You're looking for
Yes.
market inefficiencies and saying, hey, these traders are just blowing out this stock up or down too much.
Yes.
Because they got a lot to do in a very short amount of time, which is on the open. And then you'll also be doing that on the close, correct, too, with the index
Yes.
rebalancing and saying, hey, they're going to push these stocks temporarily way past where they should be trading, and you're going to take the other side of that, correct?
Yep, exactly. And that's, core, just, basically arbitrage strategies, really, even statistical arbitrage, but kind of just straight up arbitrage too. Sometimes, I've been filled, like a whole bunch of stocks I get long, I immediately short SPY against it, hedge myself up, and then you hope it comes back in. Because if you could buy the 500 stocks down here and short the SPY here, there's an efficiency there, and the algo's bring it right back in.
And this is very important. And I think everyone, don't try this today. If you haven't done this before, because I'm telling you, when Dennis gets filled on this stuff, I mean, he's not waiting like 5 minutes to get out of it.
You're flipping right away.
He's looking for like an instant, because I know that there's days where I've talked to you right after the open on a big expiration, and you'll be like, oh, man, I bought a pile of Apple on the open, and then you see like a 1 minute pop, and then it just
and then another flush.
And then another.
Because everybody else bought it on the open too.
Yeah.
The hedging is key. Like a lot of times I'll do anticipation too. I start getting filled on orders like at the open. And again, NYSE goes ding, 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 ding. They don't all open at the same time. So then I'm already like, oh, I'm going to get filled on everything. So then I'm just short and SPY ahead of it. And the algos, are sitting here, stocks trading here. They don't realize it's going to open here. And, SPY's here. So you're just trying to take advantage of those inefficiencies. Like my core wealth has been created just from market inefficiencies, not from looking at charts. I'm going to say it again. I like charts. Charts tell a story. They're a great tool in your toolbox. But too many traders rely just on charts. There is so much more information out there. Why use one tool? Imagine trying to build a home with just a hammer. No saw, nothing else, just a hammer. And Joel's went to the background. He's put me but just imagine trying to build a house with just a hammer. That's what it's like trying to be a day trader just using charts. So I love charts. I need a hammer. I need to pound nails. I need a hammer absolutely to build a home. But there's so many other tools in your toolbox. And that's what I try to talk about. And, and that's what we try to, we're going to launch, some more products and educational products and try to teach this kind of stuff. Because trying to build a house with just a hammer is not very easy to do.
Joel brings up a great point. I don't know where he went, but
I did that by purpose.
Oh, sorry.
You wanted to just throw me on the whole screen just to run away.
So Joel brings up a great point. Like, this is not the day to like stick your neck out with doing with any new type of strategy. But observe, take 5 stocks that you really pay attention to. Watch Apple and watch what it does on the open. Watch the volume in Apple and watch, whatever. I'm just throwing one stock out there because it's a large stock, but watch 4 or 5 stocks and watch how they behave on the open. And then watch how they behave on the close and the volume and after hours. And you could kind of get a feel of what happens on quadruple witching days.
Okay, man. What a great show. Christian, great input. Triple D, love when you're fired up on days like this. We got to give a big shout out to CC Lagator. He brings a perspective to the markets that is really unique. So we want to thank CC for coming on. That's it. We got, take a guess. Monday, Dennis, Monday. Who do you think the guess is going to be? Monday.
Joel, I can't always read your mind, so this is difficult. I have no idea.
Santa
Claus.
Warren Buffett.
Who have we had on the show on Mondays a lot in the past?
I'm a pattern trader, but I don't notice this pattern.
Tim Quas, market structure.
Oh,
Monday.
Tim Quas. We love Tim Quas.
I'm firing Christian and Dennis in the same
Tim
show.
Quas. We love Tim Quas.
And
again,
Monday.
Tim uses different tools too. He's got his whole edge, which some of it's charts built in, but a whole bunch of other stuff built in. Obviously, supply and demand. He looks at there too. So everybody's, got different tools. So again, just the rant. There's more tools in the toolbox than just charts.
There's more than one way to make money in the market.
100%.
All right, folks, look for the bottom of if you're a dip buyer today or you're coming in off the open, look at the bottom of the range for your stocks and look at the close. I think those are going to be good levels on the upside. On the downside, man, we're almost 40 handles off the pre-market lows. So those put buyers, I should have covered in the pre-market before the PCE. So.
This looks like a day where stocks are here, and I'm going to be here and here. Shorting up here, buying down here. This could be a day where we get some violent opens here. I love those kind of days. Those guys, the days pay the bills.
Okay. All right. That's it for today, folks. Thanks for joining us here on Pre-Market Prep.